Hi, my name's Lisa Johnson, and I'm the Yambassador at Yummy Yammy, maker of the world's only sweet potato salsas. I'd like to welcome you to this introductory video in a series of videos designed to help you grasp the difference between margin and markup and learn how to use them so that you can run your business as profitably as possible. This video is for anyone who sets pricing for any kind of business, whether you're a manufacturer or a private labeler or a wholesale distributor or a retailer. You can use this training to stop losing money in your business and to get a better handle on your profits. So in this first video, I'm going to teach you the simple, essential difference between margin and markup and how they're calculated. Now in our first example, we're going to use Judys Fresh Market. Judy runs a wonderful retail market store where she sells a lot of fresh products to her customers. Every day from Carol's Bakery, they deliver boxes of fresh muffins. They're wonderful muffins, several of them in a box. And when Carol's delivers every day, it's a local delivery, it's a local business, so there's no charge for delivery in this simple example. When they deliver every day, they leave the muffins and they leave an invoice. In the invoice, Judy is charged $5 for each box of muffins that she resells to her customers. Judy pays Carol.
So then Judy turns around and sells those muffins for $8.50 a box to her customers.
She buys it for $5. She sells it for $8.50. The important number to know is that Judy is making a profit of $3.50 on each box of muffins that she sells. So her job is to sell all the muffins, although of course with baked goods that doesn't always happen, but assuming that for the simple example that every box that was bought was sold, Judy makes a profit of $3.50 per box. So the first important number to always know is what is your profit dollars? How many actual gross profit dollars are you making on the product? Now it's called gross profit because she hasn't taken out the expenses for her lights and her electricity and her staffing and her health insurance and all those other expenses. But the gross profit just on buying and reselling the product, because she buys it for $5, resells it for $8.50, she makes $3.50 in profit on every box sold. Now, here is the really key thing to understand about margin and markup. You remember from that example, Judy is earning $3.50 when she buys the muffins for $5 and sells them for $8.50. This is a number expressed in dollars and cents, and that's really useful in one way. But when you're running a business, you tend to look not just at dollars, but at percentages. Because if imagine this scenario where you bought a product for $500 and at your store you sold it for $503.50, you would also be making a profit of $3.50. But is that a good scenario? Could you possibly run a business successfully if every time you bought and sold a $503.50 item, you only made $3.50 on it? It's much harder to sell that item than it is a box of muffins. So you clearly would be out of business in a New York minute if you tried to run your business on dollars alone. So the way most people run their businesses is you're looking at ratios, which is just another way of saying percentages. If you're math challenged, don't worry, you'll be able to get this. So the way we express this $3.50 seems like it would be really simple. There's two ways to do it. You can either express the $3.50 as a percentage of this or as a percentage of this. If you express it as a percentage of the money that you paid for it, how much did you make versus how much did you pay, then you get one percentage number. If you express it as a percentage of a bigger number, you're going to get a different number. So if you express $3.50 as a percentage of 5, you get 0.7. Or that's the same as 0.70, which is the same as 70%. That is called a markup. If you can help, it might help you to remember this because you're marking up from your cost, which is what you paid for it, what the Judy paid for it, marking it up to the cost that it's selling for. Marking it up, that's 70%. When you express 350 as a percentage of 850, this is easy to do on a calculator, 3.5 divided by 8.5, you get 0.41, which is the same as 41%. That is your margin. And you might remember that because margin really means gross profit margin. Not dollars, not gross profit dollars, because dollars are expressed in dollars and cents. But a margin, like a markup, is expressed as a percentage. And so going from 350 to 850 earns Judy a 41% gross profit margin. So that's the very, very simple and essential difference between a markup and a margin. If you think you are running your business on a 70% margin, which would earn you much more money at the profit dollars, and you're really running your business at a 70% markup, that is a world of difference in your profit. One or the other isn't necessarily right or wrong, but you'll be confused in calculating your pricing. So it's really important that you understand this one basic fact. Your profit dollars are the difference between your cost and your price. Your profit dollars expressed as a percentage of cost is your markup. Your profit dollars expressed as a percentage of your price is your margin or your gross profit margin. Now, this number is really the number that you generally want to be working with, your profit margin. It's a more sophisticated and useful way to run a business. However, it's also useful to understand how both numbers are calculated because you may have to translate from time to time when you're working with someone. Now, I'll bet that if you're watching this training video, you, like me, did not get into your business because you're some kind of math whiz. That is not why I started the businesses I've started or worked at the places that I've worked. It's because I have a passion for something. I could create something. You're making something or offering a service that's of value to people. But you need your business to be profitable at the end of the day. If it isn't profitable every day, you might as well go to the bank, cash out your accounts, and hand the money out on the street. A business is set up to be profitable. Running a nonprofit is great. That's a different story. But if you're running a business and you're trying to make it profitable, understanding margin versus markup, understanding how to translate between them and how to use them to set your pricing profitably and how to run your business profitably, then you really want to grasp this. So what I did was I was running natural food co-ops for 12 years. I don't know if you've ever been in a natural food co-op or understand how it works, but ours were owned by 1,000 or more members of our community. So my friends and neighbors all put in $100 or more to own this store together. And then they hired me as the manager. Now I have to tell you that when I first started my first co-op, I was 23 years old. I was young, and having been hired to be the manager, really, I was not all that qualified. But I did have some qualities. I had enthusiasm, and I had a willingness to learn, and a passion for the food and the people. I liked the idea that it was benefiting the community. But my job was to make sure that those co-ops were run successfully so that there was a surplus at the end of the year that we could put back into the business and grow it to benefit them more. Now, can you imagine the pressure of having 1,000 of your friends and neighbors expecting you to do well at that business because it's their business? That's even more pressure than owning my own business is now. I really felt like I had to succeed at this or I would be risking embarrassment that would last my whole life long. So I went to every workshop I could. I studied everything I could. I asked everyone for advice. I read everything and I practiced, and I screwed up a lot. But I did finally get those numbers. I did get how to do it. We did it extremely successfully. In my first co-op, in the 8 years that I ran that co-op, the day that I left, our sales were 5 times what they were when I started. 500% what they were when I started in 8 years. I feel great about that achievement. And that wasn't just because I was a nice boss. It was because I really understood numbers. And so I want to make it easy for you to understand the numbers. What I needed to do when I was learning it was put the information and the facts down, and then have some kind of visual mental models to help me remember what was what. Because like I say, I'm not a math person or an accountant or an insurance adjuster. I was there for the food and not for the numbers, but I had to know them, and I had to know them right. So I did the visuals, and then I trained myself on it repeatedly until I could understand it. And so that's what I'm offering here for you. I hope that the trainings that I offer, both in the free article, which you can find anytime if you Google margin versus markup, you will find us on page 1 of Google, and I hope that article will be useful. You can go to yummyyammy.com and search on my blog post for margin, and you'll find our article. I'm hoping that that free article will be helpful to you. Beyond that, I've created visual training materials. They're laminated to last for a good long time. They have stickies on the back, and they're ready to go up on your wall, and the little cheat sheets on your phone and your computer, so that you will never be at a loss for what those formulas are. Again, right when and where you need them. Now you understand the very simple basics of the difference between margin and markup and how they're calculated. If you'd like to join us in the second video and beyond, we'll discuss how to translate between margin and markup, and how to set your pricing using both margin and markup. And you can simply proceed to video 2.